Hi there, welcome to Kneppy Invest and welcome to June 5, 2024. Another fairly boring day on the ASX in terms of announcements. However, if you don't have much mining companies, you've probably done okay today because XGO is up, small caps flat, but resources down a fair bit in all tech. Pretty good day for technology companies. Now, we are in June, and June tends to be fairly quiet on the ASX in terms of announcements because most companies are just waiting for the end of the financial year. And we will see a pickup of interesting announcements once we go into July, particularly the end of July into August. Probably my favorite part of the year when it comes to financials or the financial markets or equity markets. Now, if I had to pick one month of the year to choose from that was not um, financial dependent, I'd probably pick June. This is my favorite month of the year, and there is a reason behind that. And I was born this month. That's probably why. And I've always had an affinity for June because of that very reason. I won't say which day I was born on, but Donald Trump was born on the same day as me. Steffi Graf, Boy George, and a few others as well. It's also Flag Day in the United States. Anyway, I am rambling on a little bit because, to be honest with you, not many things to go through today. I'm not going to go through a tweet. So I'm going to try to keep this video to under 30 minutes long. And when I usually say that is usually 40 minutes, but I really want to keep this to under 30 minutes. So the agenda for today's video is I'll just do exactly what I do in every video. I'll go through the ASX today, look at the best performing sectors, indices, companies, also the worst performing of those, and then we'll have a look at the top 5 announcements. I have come up with the list, even though we have a bit of a dearth of good announcements or exciting announcements, although a few of them are pretty good, personally good, and one other company that share price has really taken off. And I'm just not sure about that company, but we'll have a look at that company towards the end of the video because it's coming in at number 2. A few companies did not make it into my top 5, including Live Tiles. Looks like they're selling off that business because they're in administration or receivership or something like that. Zero did some sort of, wasn't a capital raising, some sort of convertible notes or something weird like that. What was it? Convertible notes? Down 4.7%. The market hasn't liked it. Prices 925 million convertible notes. 850. I don't know. Yeah, there's 850 convertible notes offering, and then price is 925 million. I'm not haven't even opened up those announcements, but the market has sold off on Zero today when overall tech has done well. And another company that didn't quite make it into my top 5 announcements, I might just mention that company briefly if we get time looking at some charts. So I don't have any charts I really want to look at, but maybe we'll have a look at this company just to see what the chart is like. And that's it. Okay, so let's have a look at the ASX today just to see how we have performed. Looking at sectors and indices, real estate's had a really good day, up 2%. Probably means Goodman Group's done really well today. And I'm not adverse to seeing Goodman Group doing really well. Telecommunications, healthcare, staples, all up over 1%. And discretionary industrials up almost 1%, which means because the overall the market is only up 0.4%, minerals or materials and energy have had an absolutely shocking day. If interesting enough, IT is down 0.73%, but the XTX is up 0.86%. So there is a difference between the information technology sector and the ore technology industry. That's interesting in itself. I don't think if you do open up the XTX, we won't be able to see any of the constituents. No, but maybe in the sector we do see. No. Okay, so there is a reason behind that, but I have no idea. Oh, here it is. So there is a reason behind that. So let's have a look at the performance today of some of these companies. We'll look at by market cap. So maybe no, Zero, WiseTech. So a few companies are down big, like Zero, Life360, SiteMinder, Nuix, but a few companies are up big. So there is a bit of a difference between those two. And I wouldn't have thought you could get that big of a difference. The very fact that the sector's down by 0.73%, but the XTX indice is up 0.86%. And the best performing indice, by the way, that's really interesting. But is it the best performing indice? So let's have a look, an expanded view. No, it's not. REITs, of course, real estate, services, communication services, healthcare, consumer staples, and consumer discretionary. Okay, so overall, unless you're heavily invested in mining companies, and I'll be honest with you, I have been thinking about just not trading mining companies because they're so beholden to the price of the underlying commodity, and you just don't know. I mean, you can look at the chart of underlying commodity and say whether it's in an uptrend, downtrend, or that sort of thing, and still the share price of the company will move up and down in line with that, while other companies that are not mining companies will just go up and down without any movement in any underlying thing they're selling or whatever. So I am thinking maybe the best way to trade is to completely ignore mining companies. It is something I'm thinking about right now. I'm not sure if I will go down that path. Okay, so let's have a look at the top performing companies, and I'm hoping one of the companies is on this list. Well, there you go. The Karma Company International, ticker code CCO, is the best performing company, up 117%, share price 1.3 cents, $18 million market cap, and this company did get into my top 5 announcements. I was going to put this company number 1, but the share price at the start of the day was 0.6 cents, and I don't like companies who have a share price below 1 cent. That problem has been solved because the share price is up 117% today. I might look at Jet Corp's chart. That company's on this list as well. That chart did pop up on one of my screeners or scanners yesterday. But otherwise, no other companies. Genetic Technology did release something today, but I didn't have a look at it. And Stealth Group. Stealth Group is on this list, up 13%. I wonder if it's still up 13%. I'm a bit dubious about that right now. Let's have a look. See, 8.7 cents. So it's only down 1 cent since then, but that is in my top 5. In fact, Stealth Group has come in at number 1. It is a company I do own, so I'm a little bit biased in regards to liking this company, and we'll have a discussion. Well, it's not really a discussion. I'll talk about why Stealth Group came number 1 later in this video, so look out for that. Let's have a look by market cap, which companies have performed well. Mercury, Zipco, Generation Development Group did release something recently. What was that? What was it? Oh, okay. Successful completion of institutional offer. So they did a capital raising. Okay, so I don't know anything about that company. I might have a look at the chart of GDG if I get time. And other than that, no other companies on this list that I really want to discuss. So let's have a look at the worst performing companies today. And I don't think there's anything here. Condor Energy, which was that number 1 yesterday? Not surprising it is. Not surprising it's down today, because when a company share price increases a lot in one day, you will usually see a bit of a pullback in the share price. So I might have a look at the chart for that company. Also want to have a look at the chart for Australian Gold and Copper, because the share price of that company has been very volatile recently. Otherwise, not surprising to see some mining companies there. But I would expect when we list this by or rank this by market cap, many top miners are in this list. So let's have a look. Lotus Resources, Latin Resources, Cooper Energy, Patriot Battles, Patriot Battery Metals, Immutep. I think they did a capital raising. Am I making stuff up? Immutep did a capital raising. Yeah, did a capital raising. So that's probably why their share price is down. And EBR has been popping up onto my radar because the chart looks pretty good. And Novonix is on this list. And Novonix did make it into my top 5 at number 3. There you go. So we know what companies came in number 1, number 2, number 3. Companies that come in number 4 and number 5 more than likely aren't on this list, but many mining companies on this, and a few other companies as well. Okay, so let's have a look at the top 5 announcements of the day. We'll start off with a company that didn't quite make it. No, we'll just wait to the chart. We'll look at the chart for that company. It's called Quick Fee. So we'll wait until then. to the chart part of this, or portion part of this video, before I talk about quick fee. But let's have a look at the company that came in at number 5, a company that released an upgrade, a company called GDF. That's not the company's name, that's its ticker code, and it's called Garda Property Group. Share price has not moved, even though they released a financial year 24 guidance upgrade. So typically when a company releases an upgrade, the share price will move positively. That has not been true for Garda Property Group. I don't know anything about this company, but they did release an announcement that I usually get excited about. And this is, what does this company do? Industrial real estate investor, developer, and active manager with investments predominantly in Brisbane. There you go. And the market cap of the company is only $255 million. So the last thing I'm going to do is look at the chart. But the company did release a profit upgrade. I actually did have a look at the upgrade, because whenever a company releases an upgrade, I will have a look at it. And it did not interest me at all. Advises that its financial year 24 distribution payout ratio guidance has been upgraded to approximately 99%. So is that an upgrade in terms of percentage? Is that it? Is that the definition of upgrade? The improvement from previous payout ratio guidance. So it just seems like they've just increased the payout ratio, which is a percentage of approximately 105%. That is due to increased revenue. So the percentage went down. So again, I just don't understand this company. Due to increased revenue from external lending activities and reduced distributions payable following the buyback and cancellation. So the performance has increased because they've done a buyback and they've cancelled 8.9 million staple securities, representing 4% of the issued capital. So that is one benefit from doing a buyback. You do have better financial performance on a per share basis. So we are seeing that with Garda Property Group. The buyback has occurred at an average price of $1.21, or a 30% discount to NTA. That's what the company should do. You should buy back shares if you think your company is undervalued. It seems like that maybe Garda Property Group has been doing that. So a few things I don't understand about this. They're saying they've upgraded the payout ratio from 105% to 99%. There's a 1. Okay. Maybe that's me not understanding these type of companies. Would you define this company as a REIT? Maybe. I want to have a quick look. There we have buybacks, portfolio valuation outcomes. So a lot of buyback announcements here. And we'll go back to the year. The last significant announcement was the interim results. I'm going to have a very quick look at the interim results. And maybe the property book. So they mentioned industrial, which, to be honest with you, we're always going to have the need for industrial property, unlike maybe retail. I wouldn't be surprised if office completely goes bye-bye in the next 20 or so years. Don't forget, working in an office is a relatively young, or a relatively new way of working, maybe 100, 150 years. And there's just no reason, because the whole reason we went into an office to work is because there was a technological gap between what we could do in an office and what we can do at home. And that gap has been bridged. There's actually no reason to be working in an office anymore. Some people and managers will say, well, we need spontaneous, spontaneous collaboration, that sort of thing. It's complete hooey. It doesn't really happen. And I will stand by that, because I've worked in an office many times, and spontaneous collaborations just don't happen. When you do see someone you haven't seen for a while, what do you talk about? You don't talk about work. Usually you say, oh, how are you going? How was your weekend? That sort of thing. How's the children going? So spontaneous collaboration doesn't often happen all that often in a workplace environment or office environment, but managers want more control. They want us to be in the office because it's all about control and power. Anyway, I opened up this to have a look. I didn't want to go on a rant. Exit of Melbourne office. Here's some of the locations. Acacia Ridge, North Lakes, Walcol, Richlands, Cairns, Barimba, Heathwood, Morningside, Pinkenba, Wacol. They all seem fairly... total property value is about $500 million, so they must have a fair bit of debt if the market cap is about 250. So they should have maybe $150 of debt, $150 million of debt. Property book. Yeah, I have gone through these sort of announcements in the past with companies, just to get a better understanding of what a REIT is doing and how to analyze a REIT. So yeah, they do have most, if not all, of their uh, property portfolio in Queensland, particularly in Brisbane and industrial. Did they have tenants? Top 10 tenants. Here it is. This is what I wanted. Volvo, Komatsu, Ausdec, Pingenbar, Queensland Government, Austrans, James Energies, C&W. Okay. Anyway, I'm getting bored with GDF. Let's have a look at the chart for this company. Probably went on a little bit too longer. I would not be surprised to see the chart in a pretty ugly downtrend. It's not as bad as it could have been, and maybe that's because it's industrial. But over the past few years, the share price has decreased a fair bit. Reached a low back in November. Remember October, November last year? That was probably just before we thought maybe the central banks around the world will decrease interest rates by 1,000% over the next year. So we're getting very hopeful at the end of 2023 that we'll have 60 million interest rate cuts, and the share price or the equities did rally around the world. And companies like this, who would benefit from decreasing interest rates, you saw their share price pop up as well. And they're now pulling back because maybe we won't see many interest rates this year, cuts this year, if any at all. Overall, if you look at the weekly chart for Garda Property, it's actually more volatile than I would have thought. Yeah, it's quite a bit more volatile than I would have thought. But anyway, hasn't been around for that long. Well, maybe 10 years. But anyway, I'm going on a little bit too long in regards to this company. So let's have a look at number 4 on the list. That's Treasury Wines. Now, this company did release have investor presentation, and they reaffirmed guidance in announcement yesterday. Seems like they did bring some people in, some analysis in to look at their premises and go on a wine tasting tour. That's what it seemed like to me when I read through this presentation. Now, they have reaffirmed guidance. So that's the most important thing. So it's not a profit upgrade, not a profit downgrade. This company's performing as expected. So what I mean by looks like this was just a wine tour. Here it is. Here it is, the agenda for today's visit. Dayu Mountain arrival, wherever that is, South Australia. And then they took a bus to the Treasury Wine's Paso Winery and drank some wine. Anyway, I don't really need to talk about this company all that much because all they've done is just reaffirmed guidance. And let's have a look at the chart. I would probably not say that the chart is looking all that amazing, but I was interested in this particular rally in the share price today. And yeah, I'm not interested in this company right now. Just looking at this chart, it's all over the place the past month or so. There's no obvious trend in the share price. I'd say there's no positive or negative sentiment in the company. I'd just say the sentiment in this company is probably neutral at this point in time. Would even say this company is good value, just based off the P/E ratio, which is, what's this P/E ratio? I'd say it's about 30, I would assume. P/E ratio 36.25. And in their presentation, they're just talking about single-digit growth in earnings or revenue. So not massive growth in earnings for this company. And on a P/E ratio of 36.25, I don't think you could say and argue that this company is attractively valued at this point in time. If you are a value investor, I do look at value, but I also look at trends and sentiment. At this point in time, I have no interest in Treasury Wines just based off the lack of trend and lack of positive sentiment. So let's move on to the next company, spend a little bit less time in less interesting companies. Let's go to number 3, Novonix. Share price down 9.15%. They're in a trading halt. Why are they in a trading halt? Because that's it. And I was interested in this because share price down a fair bit. And let's open up the trading halt. They released at 1:11 p.m. And this was actually really interesting. I actually found this interesting because this was in regards, without looking at it, this was in regards to a capital raising, but not a capital raising they're doing, rumored capital raising they are doing. And they had to squash those rumors. Okay, so here's what they say. Refers to an article in the Street Talk section on the Australian Financial Review. Let's see if we can have a look at that. Novonix. Actually, probably what I might do is just go Novonix. Novonix. Street talk. City bankers wall crossing investors for Novonix capital raise. This was released, yesterday at 12:16 p.m. Oh, I can't open it up, but it's okay. So this is it. Talking about capital raising for Novonix, released at 12:16 p.m. yesterday. How did the share price perform yesterday? Down a little bit, but down a lot today. So it looks like maybe more investors saw this particular announcement and went, capital raising, hell no, I'm getting out of Novonix. And the company's just stated in this particular announcement, I'm not sure why they're still in a trading halt, because they actually said here that Novonix confirms that no decision has been made to undertake a capital raising, and Novonix is seeking to trading halt to manage its continuous disclosure obligations. So if they're not doing capital raising, then why are they still in the trading halt? I think confirms that no decision means they're very close to making a decision that they will do a capital raising, but it's not set in concrete just yet. So I have a feeling they will be doing a capital raising. So I thought for a minute they squashed the notion they're doing capital raising, but they're very fact they're in a trading halt, and their very fact, just the wording here, confirms that no decision has been made. Makes me think they are doing a capital raising, and they will announce that as they remain in this trading halt. So let's have a look at the chart from Novonix. Probably not the best looking chart, just because the sector it's in. And in fact, this is an ugly looking chart right now. It was starting to look really good, and I'd say a few traders got caught out by this. Beautiful looking chart, got to a new high, a fairly long period high back in April. Share price got to $1.15. Novonix was on a lot of traders' radar, and the share price has almost halved since then. So you had to be fairly flexible by getting out fairly quickly, because your capital would have been absolutely destroyed. Maybe not destroyed, but yeah, the share price has, and the sentiment of this company has completely turned from almost getting to positive to negative. This is a sort of situation where it's another sort of quasi-mining company. It's not exactly a mining company, is it, Novonix? It's not exactly. Integrated developer and supplier of materials, equipment, and services for the global lithium-ion batteries. So it's not a traditional mining company, but it's in that space, and lots of negative sentiment behind this company and in this area. And even though this looked like sentiment was changing, it's not anymore. And if they do a capital raising, it would have to be a fairly big discount. I would say at least a 20% discount, maybe 50 cents. We'll say between 50 and 55 cents. And if they do it below 53 cents, it would be a long-term low in the share price. You don't want to do capital raisings when the share price is at an all-time or long-time low. And let's have a look at the weekly chart for Novonix. And this is the Matterhorn pattern. Up the side of the Matterhorn, and I actually did watch some videos of people climbing to the top of the Matterhorn, and I'm not sure if I could climb on top of the Matterhorn. Very narrow, like a ledge, and anyway, this is sort of a narrow ledge. Doesn't stay up to the top very long, and then falls straight back down to where it came from. The Matterhorn pattern. Share price reached a high of $12.50. Current share price is, what was it, 60 cents. Hopefully, you're not a long-term shareholder in this company, and you just knew this was a story stock, and you got out in time. This is what happens if you fall in love with a story stock. This can happen to you. You can destroy your capital. And I still think there's probably people who have a lot of faith that Novonix will make it, but who knows? Maybe it won't. So that's coming in number 3. We have Novonix. Are they or will they not do a capital raising? I'm thinking yes, they will at this point. Now on to, maybe this company should come in at number 1. Yes, I'm going to put Karma Collective, whatever this company is called, number 1. I'm going to change this. So coming in at number 2, we have Stealth Group. A company I do own, up 9% today. I'm happy with that. Not massive share price rise, not huge volume. I suppose it is pretty big volume. 746,000 shares traded. Last time we saw that amount of shares traded was back on the 2nd of May. So only 1 month ago, I suppose. So why is Stealth Group on this particular list? Coming in at number 2. They went into a trading halt yesterday. Whenever I see a company that I own in a trading halt, I just automatically think capital raising. That's my first thought. And the reason I go straight to capital raising is because I'm looking at the worst case scenario. That is the worst case scenario. But this wasn't a worst case scenario. This particular trading halt was in regards to a proposed acquisition. They've announced the acquisition today, and it is an interesting acquisition. Now, this company is high revenue, low margins. That's the most important thing you have to know about Stealth Group. They are high, so they have they sell stuff like Heatley's Safety Industrial, C&L Tool Center, Skipper Transport Parts, Industrial Supply Group, United Tools. So stuff, what do you call it? Equipment, tools. Maybe that's the best word. Tools. So probably a very low margin business. So they're making another acquisition. Australian Distribution Group. Acquisition of Force Technology, market-leading distributor of consumer mobile accessory products, which is interesting in itself because that's not really tools. Now, what was interesting was the transaction multiple only less than 4 times EV to EBITDA, so it's a fairly cheap acquisition, $9.5 million. Now, this tool, or Force Technology International, has revenue of $44 million, forecast revenue for this year, normalized EBITDA 6% before transaction costs, so another low margin business. So combined, pro forma combined financial year 24 for Stealth Group and this Force Technology, combined revenue of $159 million. So you might be thinking, well, this company must be pretty big. Just wait till you look at the market cap. $159 million of revenue and EBITDA of about $8.5 million before transaction costs. They do mention this is an ESP or EPS accretive or earnings per share accretive acquisition. Always a little bit skeptical when companies say that in regards to an acquisition because they always say that. And a balance sheet remaining strong. Meaningful synergies, always a little bit wary, cynical when companies mention meaningful synergies. Sometimes it does happen. Anyway, we don't need to go any further. Allotment of 14.4 million shares at 24 cents. So it's sort of like a capital raising. And it's funny because that share price was higher than the day before. So this was sort of a premium capital raising. Sort of quasi capital raising. Anyway, so do I like this acquisition? Yeah, sure. Why not? And the markup of Stealth Group is not that much. It's like $25 million. There you go, 25.24 million. So this company, if they can just increase their margins with $150 million of revenue, just increase those margins a little bit, this company will be highly profitable. And for a company that has a market cap of 25 million. So Stealth Group is definitely a company to put on your radar. And another reason why to put this company on radar is just the chart. The chart does actually look pretty good. Now, this is the weekly chart, first of all. So you can see the share price is in a weekly uptrend. And then if you have a look at the day chart, because there is a little bit of, I wouldn't say the company is highly liquid. It's not. You do see a lot of trading every single day, but there is a little bit of volatility there. Now, the share price has fallen a little bit of selling. And that's just those shareholders who bought between March and April at higher prices. So if the share price was an all-time high, I would expect a fair bit of buying today and not as much selling. And the other thing I like about this chart, if you do look at the daily chart, going back to 2022, just the increase in volume, gradual increase in volume over time. You'd probably be able to see that better on a weekly chart. You can definitely see increase in volume since the middle of 2022. There was pretty good volume in 2021 and 2022 when the weekly chart was in an uptrend. But when the share price just went sideways in 2022 into 2023, there was low volume. And now volume has gone back up again. That's a good sign. Anyway, so a nice announcement from Stealth Group. I don't mind this acquisition. Sure, it's a good acquisition. But again, this is a low margin business. So don't be running to your bank to get out a lot of money so you can buy heaps of shares in this company because they have $150 million of revenue. That's not how you play this company. It's based off their markup, their valuation, and if they can increase the margins in the company, this company could be a really good performer over the next few years. There's a lot of ifs there. So let's go have a look at the company that came in number one. The Karma company, up 133%. And they announced e-commerce sales up 45% to $16,000 per day. I saw this announcement. I went, oh, ugh. I saw what they do, and I was like, ugh. So they do sell products, and they sell like health products. So natural solutions to calm nerves, support mind and muscle relaxation, and induce sleep. The product range includes drinking powders, teas, shots, concentrates, and capsules. Sold our under our house of brands, Fiji Kava, Taki Mai, Dunedin Hemp Works in markets including USA, Australia, China, New Zealand, and Fiji. They also sell Kava products in Fiji. So if you like that sort of stuff, maybe this is the company for you. I'm just always wary about companies like this because I'm pretty sure they are selling into Coles. Yeah, sales via Coles Australia also continues to grow. And it could just happen in an instant that Coles says, no, we don't want to sell your products anymore. Now, it's good that the e-commerce sales are increasing, up 45% to 16,000 per day. Now, if you think about a whole quarter, so 90 days in a quarter, so we are talking about approximately $1.5 million in sales or e-commerce sales for the quarter. So let's go back to the most recent Appendix 4C, just to see if this company was close to becoming operating cash flow positive or anything like that. And the answer to that question is no. Well, this opened up fairly quickly. So revenue of 1.1 million and cash receipts of 915,000. So it does look like cash receipts will increase. And that's a good thing because the company was operating cash flow negative by 926,000. So unless they keep a lid on all their spending, more than likely they'll still be operating cash flow and free cash flow negative for this quarter and maybe even the next few quarters, unless they really see a massive ramp up in receipts. And even then, more than likely they'll have to spend a lot of money on product manufacturing and operating costs. So, and even advertising marketing to really get their products out there, they'll probably have to increase that spending as well. Definitely maybe an announcement to put on your radar, but I need more proof. But the market doesn't want any more proof. The market is convinced about this announcement, and the share price is now above 1 cent, now 1.4 cents. So let's have a look at the chart for, what's it called again? The Karma Company. Was this company used to be called Fiji Kava or Kava, whatever it's called? Let's have a look. CCO. No. There was another company called Fiji Kava or something on the ASX. I haven't seen that company for a while. So I thought maybe this company changed its name. And let's have a look at the chart. This is the weekly chart, so no interest there. But if we hone in on the daily chart, so this announcement has caused some interest, but there has been a little bit of selling today because share price has been as high as 2 cents, as low as 9 cents, which I think was the open, and right now is at 1.4 cents. But this chart, this could be almost considered a breakout. A long period where the share price did nothing, and we have seen a bit of an increase in volume over the past 3 months. So there's a bit of an increase in volume in July last year. That was the end of the downtrend. And now we're starting to see an increase in volume. And there is a thought, maybe even some proof, that sometimes volume does lead price action. And you have seen that possibly here with Karma Company. But that's all I'm going to talk about. A company I'll just put on my watch list just to see. I'll put this on high volume spec. This is still a spec company. It's not a story stock because they are selling stuff, but maybe not on my absolute radar just now. So this video has gone on a little bit longer than I wanted to. So I was going to have a look at some charts, but I'll leave that for another day. So the last thing I should say is I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.